diesel fuel. So let's fill it up at Tesco, see how much it costs. Crude oil prices fallen, but fuel prices are still going up. 9%, 34 miles. Let's see how much it costs to fill up. How much? How much to fill it up? £1.72. Bloody hell, £1.72 a litre now for diesel. This is going to be at least 60 quid, maybe even more. A lot of these pumps are out of use, so come early in the morning to avoid the queue. I need the fuel. I'm putting diesel in. 60 quid. Bloody hell, it's going to be 70. Yeah, full. £71. That is a lot. Right then, do I want receipt? £71. Full. £71. And it was about 9%. Bloody hell. Expensive. I don't know how people who commute cope. That's gone up a lot. £1.72 a litre. That's expensive. UK CPI inflation hit 6.2%. That's RPI, that which most corporations raise their prices to, has rocketed high to 8.2%. That's over a 30-year high. Whilst real UK inflation stands at least 15%. Meanwhile, across the pond, US CPI inflation is at 7.9%, on the brink of breaking above 8%, with real inflation also around 15%. So much for the pandemic deflationary depression that the clueless mainstream media had been promoting for the whole of 2020, and then sleepwalked into the mantra of transitory inflation of 2021. Finally awakening during 2022 to what amounts to out of control inflation for this year. Though the gullible fools swallowing the central bankster's sales pitch of laying the blame on Tsar Putin and his Afghan War 2.0 in Ukraine, which illustrates the extent to which what you read in the mainstream press is pure garbage written by clueless journalists. Instead, I said what was likely to happen, not this year in 2022, not even in 2021, but right at the back of the beginning of this accelerated phase of the inflation megatrend in mid-March 2020, when the current phase of QE forever began, when governments went on a debt-fueled spending binge with their central banks dutifully monetizing by doubling their balance sheets, printing trillions of dollars of fiat currency without abandon, so as to avoid that which most were expecting at the time, i.e. a COVID economic black hole. Still, despite rampant money printing, the fools have persisted with their deflation mantra, totally clueless. And go read my now completely open to the public articles from that time with links in the description. For at that time, that pressing information was for patrons only, who were in receipt of it for just $4 per month, that got the unequivocal message to partake in the mother of all stocks buying opportunities. $4 per month, that's not even peanuts. I'm seriously underselling myself. So what does one do when faced with rampant money printing? Well, the exact opposite of what the clowns in the mainstream media were advocating at the time, which is to go and invest in assets that are leveraged to inflation. That is quantum AI tech stocks, housing, and to a lesser extent commodities. Just go read what I wrote at the time and watch my videos, that virtually all of my videos since that time ended with a warning that big inflation was coming, which is why I bought everything I thought I needed to buy in terms of big ticket items for several years, from mid 2020 to mid 2021, since which time I've been largely out of the big ticket item consumption loop. Just as the supply chains closed their death jaws, sending inflation spiralling even higher, and whilst the government and the central banksters utilize that pseudoscience, that pseudoscience that pops up all the time in the mainstream press that is called economics, to pump out transitory inflation propaganda. You don't get transitory inflation when you print trillions of dollars and then get the central banksters to monetize it. That by doubling their balance sheets. It's a big con, I tell you that most fell for and still do to this day. Just look at the journalists. They're good at writing reams and reams of highly polished text, but at the end of the day, they are what they are, journalists who don't have a clue at what is actually going on, and hence total BS. We have high inflation not because of Russia, Tsar Putin or any of that, but because of rampant money printing that resumed without abandon in mid-March 2020. That's why we've got inflation. Exponential money printing. Just look at the blooming Fed balance sheet, any central bank balance sheet, and you'll see the fingerprint, the smoking gun. You'll see the inflation smoking gun. The Fed balance sheet, Bank of England balance sheet, ECB balance sheet. There's your inflation smoking gun, not blooming howitzer in Ukraine. And so far we have not even begun tinkering around the edges of mountain of money printing that still continues to this very day. The Fed is still printing more money. There has been no tightening whatsoever. In fact, I am pretty sure that today's Fed balance sheet of 9 trillion will be even higher a year from now than where it stands today. In fact, we will probably see the Fed's and other central bank balance sheets more than double yet again during the remainder of this decade, i.e. to at least a $20 trillion Fed balance sheet. So much for the BS taper talk. And what I've been expecting to likely to become manifest, that of high inflation is likely to persist for the whole of this decade. That means a lot of persistent pain in the West for most folks who are not prepared for high inflation. And well, if there's pain in the West, that means, well, that's going to translate into an inflation nightmare for the developing world, where they won't be able to feed themselves. That's going to result in a lot of, starving economic migration that will make what happened during the 2010s look like a picnic. And where asset prices and inflation are concerned, that is the focus of my next in-depth analysis, which is primarily on the housing markets, UK, US, that I aim to complete within the next few days, which will be first made available to patrons who support my work. So thank you for supporting my work, patrons. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month, which, to tell you the truth, is nothing compared to what you're getting a window into. In the meantime, this is what inflation began warning to expect for 2022 over 6 months ago in September last year, since which time the inflation recession signal has got even stronger. Folks, we are heading for a recession. So don't expect this stock's bear market to bottom anytime soon. Yes, we'll get spikes high. Look, go read what I wrote in September of how things could play out during this year, reinforced during December. This was before the bull market peaked, that we're going to be in for a volatile 2022 with a downwards bias. It's not going to move down in a straight line, and you're going to get lots of spikes higher, which is what's coming to pass. But this bear market is not done. So I don't expect this stocks bear market to bottom anytime soon. Nope. As I voiced to my patrons, we are probably only at the halfway mark, but it's hard to say. But again, more on that in my forthcoming in-depth analysis of what I expect the stock market will do. That will take my existing trend forecast as of September 2021 that I updated during December 2021 in light of the CIA-18 indicator or neural net signal to be more accurate, and project into the end of 2022. So once more, do consider becoming a patron by supporting my work for just $4 per month for ahead of the curve analysis from someone who has been doing battle in many bull and bear market wars of attrition over the past 4 decades. And how many people do you know who both traded and beat the greatest crash in history? Something that people only read in the history books rather than actually experience and beat. That's 1987. How many? Been there, done that, rinse and repeated many times since, right up to the present day. As for Ukraine, well, go read what I wrote in January and posted long before the war began of how I expected to transpire. Of course, Putin's made a dog's dinner of it, given that he's fallen to the same syndrome that the Chinese emperor will fall to, which is that he's surrounded by yes men who just tell him what he wants to hear. Unfortunately, there is a high probability he will use tactical nukes in Ukraine. Either that or it's curtains for Mr. Putin. Anyway, do consider becoming a patron by supporting my work for just $4 per month as we ride the inflation and the quantum AI megatrend into the future. Inflation. 175. It used to be £1 a bottle. These 2 litre bottles. £1, 125, 150. Now 175. That's too expensive. Inflation. I'm not paying 175 a bottle. You have to make do with water from now on. And milk. Inflation is rampant now. It's not going to come down. It's permanent. As I've been flagging for over a year. Shopping in Tesco's, look at bloody prices. Oh, I did find some bargains. £1. See how much it costs. I'll check out today. How's it going to cost me? 300?
No, probably £1.
£1, I hope so. 300 maybe. Liza, that's where they put the cats they don't want. If you don't like your cat, just shove it in the box.
Why do you say that?
That's why it says donate your cat.
Can you
Donate cats. 320 discounted to 255 because of the club card. Could have been worse. I know why it was lower than expected. Didn't buy any drinks. I only spent about £30 on drinks. Anyway, inflation is not transitory, it's permanent. It's never going to go down. Might temporarily dip, but then it's going to shoot back up. 6-7% fake CPI and more like 12-15% real. What you experience in the shops. Well, let's pack it all up and get off home. That's the trolleys emptied. Just one to go. Put that on a seat. Blooming expensive. Bought less than usual. 2 years ago this would have been about 150, 140, 150. Now it's 250 after club card. With it, without it, it'd be 320.